All right, let's get right into it. We need to talk about a very narrow stretch of water that has suddenly become the flashpoint for a huge global crisis. It's one of those places you've probably heard of but couldn't point to on a map. Yet what happens there, well, it could mess with everything from what you pay for gas to the health of the entire world economy.
So get this, at its most narrow point, we're talking about a channel that is just 21 miles wide. That's it. For a lot of people, that's shorter than their daily commute to work. It's this tiny, tiny gap in the middle of the ocean. And that one simple fact, its size, is what makes it so incredibly important and so dangerously fragile.
And through that little 21-mile gap, you have nearly 20%. That's a full fifth of the entire world's daily oil supply being funneled on these massive supertankers. This isn't just some important shipping lane. It is, and this is no exaggeration, the absolute jugular vein of the global energy economy.
And right now, that artery is blocked. The flow has stopped. You've got oil tankers just sitting there, stalled in the Gulf. Global markets are, freaking out, and governments are scrambling. The whole system is backed up, and we're just now starting to see what the consequences are going to be.
Okay, so let's dig into that a little more. Why exactly is this one strait considered the world's energy artery?
Well, just look at this list. These countries are absolute giants in energy production. For Saudi Arabia, Iraq, Kuwait, Qatar, the UAE, the Strait of Hormuz isn't just an option to get their product to the world market. It's pretty much the option. It is their main maritime highway out.
And that's what experts call an energy choke point. And the name is just perfect, right? Think of it like a major bottleneck on the global shipping highway. If you cause a problem there, it's not just a local traffic jam. You set off this chain reaction that threatens the energy supply for, well, pretty much everyone. And the Strait of Hormuz? It's the most critical one on the planet.
So we get why it's so critical. Now for the heart of the matter. What actually happened? How did it get closed?
Now this is so important to understand. The strait isn't blocked by like a physical wall or a sunken ship. It's been closed by something that's just as powerful: risk. Things have gotten so tense in the region, with military threats flying around, that shipping companies just can't get insurance to send their massively expensive tankers through there. So the mere threat of a conflict has been enough to grind everything to a halt.
And that gets us to the money side of all this. Because if there's one thing markets hate more than anything, it's uncertainty. Traders aren't just reacting to the fact that oil isn't moving. They're pricing in the risk of what could happen next. And that means insurance costs go through the roof, the markets go wild, and companies have to plan for worst-case scenarios. That kind of uncertainty, yeah, it always comes with a huge price tag.
Right, so a crisis that starts in this one little strait, it never stays local for long. It sends out these ripples, these shock waves, across the entire global economy. And this is where it starts to affect people thousands of miles away who've never even thought about this place.
It's like a line of dominoes, right? It's a pretty clear chain reaction. First, you get the supply disruption. That immediately makes the price of crude oil spike. Then, the fuel for every ship, plane, and truck gets more expensive, which drives up transportation costs for everything. That can slow down manufacturing, and if it goes on long enough, you're looking at a real risk of global inflation, making everything we buy more expensive.
And believe me, this isn't just some abstract theory from an economics textbook. We are talking about huge, energy-hungry economies all over Asia and Europe that absolutely depend on that oil. For them, the pressure is immediate. Even a temporary shutdown is a massive headache. A longer one? That becomes a serious economic threat.
But this is about so much more than just oil prices. Underneath all the economics, what's really playing out here is a very high-stakes game of geopolitical chess, with some really powerful players making some very calculated moves. You've really got two totally different sets of goals clashing here. For the regional powers involved, the ability to threaten the strait gives them a huge amount of leverage. It's a bargaining chip, a way to apply pressure to get what they want. But for the big global powers, their interest is the exact opposite. They just want stability. They want ships to be able to sail freely. And most of all, they want to avoid things escalating into a real fight.
And this is what makes the whole situation so incredibly tense. This isn't happening in an empty patch of ocean. There are already major naval forces from several countries operating right there. And what that means is that any little miscalculation, one ship getting too close to another, a misunderstanding, it carries this enormous risk of blowing up into a much wider, much more dangerous conflict.
So the huge question now is, where does this all go? How does this get resolved? From what analysts are saying, it looks like there are really three different paths this could go down.
So it really boils down to three possibilities. You've got the best case scenario, diplomats figure it out, things cool down, and the strait reopens pretty fast. Then you have the messy middle scenario. This drags on for weeks, the strait is sort of open, sort of closed, and the markets are just on a razor's edge. And then you've got the worst case scenario. Some kind of military mistake happens, and this thing widens into a much bigger crisis.
And you know, a quote like this really puts it all in perspective. These little narrow waterways have always been flashpoints. The Suez Canal, the Strait of Malacca. History is just littered with examples of how a conflict in a tiny geographical spot can spiral out and have these massive, massive global consequences.
And that's really where we are right now. It all comes down to this one simple, terrifying fact. A 21-mile passage is now carrying a global-sized risk. The pressure in this vital artery is building, and the question that everyone, from oil traders to world